The Finance Act Effective Date Variation Order 2023 has now deferred the commencement date of the changes contained in the Act from May 28, 2023 to September 1, 2023. This is to ensure adherence to the 90 days minimum advance notice for tax changes as contained in the 2017 National Tax Policy. Executive Order 2, the Customs Excise Tariff Variation Amendment Order 2023. This has also shifted the commencement date of the tax changes from March 27, 2023 to August 1, 2023, and also in line with the National Tax Policy. Order 3, the President has given an order suspending the 5% tax on telecommunication services as well as the excise duties escalation on locally manufactured goods. 4, further to his commitment to creating a business-friendly environment, the President has ordered the suspension of the newly introduced green tax by way of excise tax on single-use plastics, including plastic containers and bottles. In addition, the President has ordered the suspension of import tax adjustment levy on certain categories of vehicles. Like I said earlier on, any vehicle of 2,000 capacity, engine capacity and above, which the tax was imposed upon, has now been suspended. However, they have generated some significant challenges for and elicited serious complaints amongst key stakeholders as well as in the business community. A document known as the 2017 National Tax Policy, approved by the Federal Executive Council of the last government, prescribes a minimum of 90 days notice from government to taxpayers before any tax changes can take effect. That is the regulation. This global practice is done with a view to giving taxpayers and businesses reasonable time to adjust to the new tax regime. However, both the Finance Act 2023 and the Customs Excise Tariff Order 2023 did not give the required minimum notice period, thus putting businesses in violation of the new tax regime even before the changes were gazetted. As a result of this, many of the affected businesses are already contending with the rising costs, falling margins, and capacity underutilization due to various microeconomic headwinds, as well as the impact of the Naira redesign policy. But a further escalation of the approved rates of the current administration presents an image of policy inconsistency and creates an atmosphere of uncertainty for businesses operating in Nigeria. The excise tax of 5% on telecommunication services has generated heated controversy. You all wrote about it. There is also a lack of clarity regarding the status of this tax, just as players in the sector also complain about the imposition of multiple taxes on their operations. We have also seen that the green taxes, including the single-use plastics tax, that's the SUP, and the import adjustment levy on certain categories of vehicles require more consultation and a holistic approach to the country's net zero plan in a manner that does not impact the economy negatively. The federal government sees business owners, local and foreign investors as critical engines in its focus on achieving higher GDP growth, an appreciable reduction in unemployment rate through job creation. The government will therefore continue to give requisite stimulus by way of friendly policies to allow businesses to flourish in the country.